What's going on, guys? Christopher Balmaceda here with My Home Group, coming to you with another video. Out and about today with the wife, running errands and things like that, so that's why I'm sitting in the car holding my phone. I just know I didn't get my video done yet this week, and this is my one opportunity to try and get it done, so figured I would get it shot and edited and out to you guys so you guys could get the information today here on Tip Tuesday. I wanted to take a second, though, and thank you guys so much for just the amazing support and comments that I got last week on my last week's video talking about the difference between today's market and the market back in 07, 06. It really means a lot to me that you guys are just sitting here really actually seeing what I'm putting out there, engaging in it, and that it's bringing value to you guys, because that's what really sets me on fire and gets me going to want to continue to do this. So if you had noticed on the comments last week, we kind of had a feed going on regarding foreclosures and what to expect moving on into the year, and I wanted to make this video because I wanted to talk about a topic that can and will possibly lead to foreclosures, and that is the forbearances and the ending of the eviction moratorium, that is going to be hitting here pretty soon. Why is this important, and why is this going to cause the foreclosures, is what a lot of people are asking and bringing up. Well, the biggest key thing is when the forbearances were offered back when the pandemic first started back in early part of 2020, a lot of people were not educated or made aware of what to expect with the forbearances. Everybody just thought that was like a skip payment, where the payments just go to the end of your loan and that's the end of it. But that is not how it works with a mortgage. A forbearance essentially says, hey, we're going to hold off on your payment, but once the forbearance is up, you are responsible for all the months that you missed plus your current mortgage. For example, if you have been on a forbearance for 12 months and have not made a payment on your mortgage for 12 months, come month 13, which would be in August when it comes to an end, you will be responsible for 12 months worth of mortgage payments as well as the August 1st payment. Now, if you're like me and everybody else out there, there's no way that you're going to have 12 months worth of mortgage payments available in your bank account to get caught up. So what do you do? How do you handle this? Well, the first step is you can work with your bank and your mortgage company to have a conversation with them to discuss doing installments, where you can make payments at a certain time on top of your mortgage payment to pay this off. You can do this in a 12-month period or a longer term based off of your bank and mortgage, if you can do that. Your other option would be you can't catch up, you can't make it work, and the bank starts to foreclose on you and then hit your credit with an issue and things like that. The problem you run into with that is you are now giving the bank your home, you now have a negative impact on your credit, and you're losing all the equity that you possibly have in your home that you earned and gained over the past 12 months with the way the market has been and previous time that maybe you owned your home. So what do you do? What's the best situation for you? I can't answer that for every individual. Some of you may be able to work something out with your mortgage company, but for those who can't, my advice to you is use and take advantage of this current market to get out from underneath your home, get your equity, and then either upgrade or make a lateral move to a home that's similar to what you're in, or move out of state, or whatever your plans are. But don't just sit still and allow the forbearance to overwhelm you with all these payments that you now have to come up with, which now means you don't make any payments, and allow the bank to then come at you and foreclose on you and allow you to be in a situation where you're not only losing your house, you're losing your equity, but you're also going to have a very negative impact on your credit, which will keep you from being able to purchase a home moving on. So my advice to you is if you own one home, or you happen to be a landlord and own multiple homes and are behind because of forbearances, my recommendation is let's have a conversation, see what you can sell your house for, so we can pay the bank off, get you caught up, let you walk away with your equity, and then whatever the plan may be, whether it be to purchase another home, whether it be to rent out, or whatever the case may be, but let's just get you right so you don't have any negative impacts on your credit and you don't lose out on your equity on your home. Now, for those of you who are landlords and are concerned about your tenants, let's just say you have a really good tenant who just hasn't been able to pay, but you also haven't been able to pay, and you're trying to figure out what you do. I have options for you to get investors involved who will purchase your home and allow your tenant to stay in place using the current lease that you have in place. This will save you from having any negative impacts on you and losing the equity in the home that you own, as well as keeping your tenant in place so they don't have to go searching for a house. Or who knows, maybe they could even buy the house from you and just save everybody a headache and a hassle at that point. Anyways, that's my advice to you guys. I hope the information was useful to you. I hope you got something out of it. You guys, if you have any questions, reach out to me, 623-693-5667. Email me at crispyrealty@gmail.com, or you're welcome to comment here on the video here on Facebook or YouTube, wherever you're seeing this. You guys are awesome. Thank you so much. Have a good rest of the week. And until next time, remember, you're more than a transaction.